It is May 10th, 2022, and today we'll be talking about the Q1 earnings report from Metamaterials, stock symbol MMAT and MMTLP. This is my take on it, and let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. There, hope you're entertained. So, George Palikaris, he tweeted out that he's excited for tomorrow's webcast on MMAT. Gives a time and the link, and you click on the link. It takes you to this Sequire website. It's a Quire website, whatever. And if you want to hear what's going on, just register, fill out your name and whatnot, and you can hear what they have to say. Okay. They've announced earnings already. They followed the SEC announcements. This is the management discussion and analysis of that, basically. Okay. They also announced, along with the earnings report, they had a shareholder letter, which is a quick overview of everything that's going on. So that way you don't have to read through all the numbers. Don't worry, I'll read through the numbers for you. Again, this is my take on it. It's entertaining, hopefully. They announced some financial results, and basically the gist of their financial results is they have $30 million in cash. Their revenue grew a lot, and good things. Okay, the revenue grew a lot mostly because they acquired a company called Nanotech, which is doing well in sales, and the sales revenue of Nanotech is increasing. So there you go. And the first thing they could talk about, of course, is the Nano-Optic and Color Optic. These are technologies and products and services that the Nanotech Security Corporation, which Metamaterials bought, that's what they sell. They're doing good. And they're getting $2.2 million in additional purchase orders from this G10 central bank customer. Pretty good. So, good work. Next. Oh, they're also they're in the process of increasing production, all that. Stuff they should be doing. They're doing. Good. Next. NANOWEB. NANOWEB is another technology that they have. It's basically an invisible wire mesh that goes on glass or thin films. Basically, it goes on glass. It's transparent. You can't see it, but it's an invisible. Think of it as an invisible wire. Okay, NANOWEB, and what it can do is it can influence electromagnetic waves. These are basically RF signals, microwaves, that kind of thing. It's pretty cool. 5G cell signals, that kind of stuff. So that stuff is being developed at the Pleasanton, California facility, and it's brought online. And they even did a demo with a microwave oven where they have taken the door of the microwave oven and put a window in there. And if you look at the window, it is clear, crystal clear. You can look inside that oven and see what's going on. You don't have that wire mesh in front and obscuring your view. What does this mean? Well, they've been talking to microwave oven manufacturers. They've demonstrated a microwave oven. By the way, a microwave oven will be, they'll be operating anywhere between 1,000 watts to multi-thousands of watts of power. And their NANOWEB is keeping everyone safe because it keeps all that harmful RF radiation inside the oven so that it doesn't get out. So there's no leakage, basically. There's no leakage of harmful RF or harmful EMI, okay? And not only that, you can look inside the oven. What does this mean? What this means is that if you're a microwave oven maker, you now have a key differentiating capability. You'll have a crystal clear screen that people can look in. So when customers walk through the door, they're looking at various microwave ovens. You can't see inside most of them, but one of the ovens might have a crystal clear window that you can look through. Well, that's kind of interesting. That's a key differentiating factor. That's what makes customers want to buy your oven as opposed to your competitors' ovens. Okay? When your competitors see that, they'll probably want to have that same technology, right? And where do you go to get that technology? Well, metamaterials. So they're doing really well. Okay, it's a very cool demo. And finally, we talk in the shareholder letter about the disposition of the oil and gas assets. This is a big deal. This is what we've been waiting for, but let's see what they said. Okay. At the end of March, we provided an update on the sale or disposition of the oil and gas assets. Once completed, either the consideration received from a sale or the continuing operation of these assets will be owned by the company's Series A preferred stockholders. We are currently planning to exchange the Series A preferred shares for shares of Oilco Inc., a wholly owned subsidiary of the company that holds all of the oil and gas assets and operations. To complete this exchange, an audit of the oil and gas operations was required. Meta engaged an auditor, and the audit is now complete. When the exchange is completed, holders of Series A preferred shares will exchange their preferred shares pro rata for the Oilco common shares. The necessary regulatory and legal framework related to the asset consolidation and exchange is expected to be completed in the coming months. Okay, that's a lot of words out there. You might have felt bored listening to all that. You might have fallen asleep listening to all that. So this is what I see. We are currently planning to exchange the Series A preferred shares for Oilco Inc. So if you have the Series A, they're planning to spin it out to Oilco and exchange the shares. Okay, they needed to do an audit. The audit is now complete. Okay, the audit is now complete. That means that the only thing left to do is exchange the shares. To exchange the shares, they need to do these regulatory and legal work. And that's related to asset consolidation. Asset consolidation means putting everything into Oilco. Okay. Basically, they need to make sure that they fill out the right paperwork and that Oilco owns the right assets. And then once that's done, then the exchange is expected to be completed. Then they're going to do the exchange, right? And they're expecting that whole thing to be done in the coming months. So in the coming months, we're going to have Oilco shares instead of MMTLP shares. That's what they're saying. Okay. So that's a big deal. We like that. That takes us to the actual Form 10Q, where they talk about everything in in-depth detail. I don't know if you guys normally read Form 10Qs. I like to read them, so I'm going to go over them. This is what's known as a balance sheet. We talk about assets and liabilities. This is basically what the company owns and what the company owes. Okay. In terms of cash is one of the most important things that the company owns. Cash is cash, right? We got cash and restricted cash. We got about $30 million. Okay. 29.75 million in cash and cash equivalents. And in restricted cash, we have almost $500,000. Okay. So that means we have over $30 million in cash. Good to know. Okay. Good to know. In terms of total assets, all the assets, right? We're talking that there's about $404 million in total assets. $404 million. It's quite a lot. It's good. It's good. Total liabilities. This is what the company will owe or owes, right? These are the debts they owe, that kind of thing, right? $92 million in total liabilities. A lot less than their assets. It's pretty good. That means that if you look at the total liabilities and stockholders' equity, of course, the two have to balance out. That means the stockholders' equity is positive. It's positive to the tune of $321.7 million. $321.7 million. Okay, they have a fair amount of positive shareholder equity. Of that shareholder equity, right, I think it's even more, right? Because if you look at it, if you look at the liabilities, right, which you're supposed to subtract from the assets to get the stockholders' equity, you're subtracting 92 million, and of that 92 million, 72 million comes from the preferred stock liability, right? That's the valuation of the oil and gas lands. They think they could potentially have to pay out $72 million. The reality is that they're going to have to pay out a lot more than $72 million, but they're going to be getting a lot more than $72 million. Whatever they get, so this doesn't really jive, is the way I look at it, right? This preferred stock liability, that land's going to be sold, so they're going to get something else in return, and that something else in return is going to go to the shareholders. Metamaterials is not going to have to pay out of their pocket $72 million. Whoever buys that oil and gas lands, they'll be giving them stock or money, and that stock or money is going to go directly to the MMTLP shareholders. So it's a pass-through. I don't even count that. Okay? I don't even count that. But it has to be counted for accounting purposes right now. Trade and other payables is the next biggest number, and that's about $10 million basically. Okay, that counts as a valid liability. So let's just say that the liabilities they got in the books are something in the range of, I don't know, $10-15 million, something like that. It's not very much. Okay, it's really not. That means that your stockholders' equity actually is greater than what is given. Okay, again, these are all accounting things that happen in the way that you will value things. This is my take on it. I'm not going to speak to you in accounting language. I'm going to speak to you in what I consider to be important to me. So let's look at the revenue stream or the income statement. Okay. In terms of revenue, you've got money you spend and then money that you receive. Okay. Revenue is money you receive, right? So total revenue, they made about $2.9 million. Okay. Well, effectively, they made $3 million, $2.975 million. That's close to $3 million. So they made about $3 million in income. They got a net loss of $18 million, which means they spent more than they made. And the first thing that you think of as a shareholder is, what is going on? Are they spending $18 million? You got to look into this, right? Immediately, it made me think. Well, it turns out 19 million of that 18 million, that comes from the net loss, comes from operating expenses, which are selling and marketing. It's not too much, it's 1 million. G&A, general and administrative, 14.6 million. What kind of G&A are they doing there, right? That's my first thought. What's going on with G&A there? R&D, 3.97 million. Okay, that basically accounts for salaries of all the PhDs doing the research and development. Okay, perfectly viable, not a problem. Okay, well, what's going on with G&A? Why is G&A so high? So let's look at page 25. That explains why what's going on with G&A. So we got to break down. 4.2 million is in terms of the G&A, it comes from professional fees, mainly due to legal costs associated with the pending SEC investigation and ongoing lawsuits, as well as other consulting fees. Okay, so we got professional fees that are being paid because of various pending SEC investigations and lawsuits. Basically, lawyers are being paid. I'm calling that abnormal. That's not a normal thing. So hopefully that can decrease over time. But yeah, it's an abnormal expense. What else? 3.2 million. Increase in share-based compensation, mainly in relation to the quarterly vesting of RSUs and stock options granted during Q1 of 2022. That's RSUs. Though that's restricted stock units. Basically, that's stock being given to certain employees that provide unique skills to advance the technology. It's not money that's being paid out, it's stock that's being paid out. And that stock has a certain value, so it goes on the books as an expense because it has a certain value associated with it. But the company's not shelling out $3.2 million. Okay. It's not a real, that's stock. I don't count that. Next, 1.8 million increase in salaries and benefits associated with the increase in headcount throughout all locations, including as a result of 1, our continuous growth in talent acquisition, 2, the acquisition of Nanotech in 2021, and 3, contractors hired to manage the O&G assets in the latter part of 2021. Okay, let's break that down. They're hiring people. Okay, valid expense. Good. They should, because they're a startup. They're increasing their technology. Great. Acquisition of Nanotech in 2021. Okay. Salaries and benefits of the Nanotech employees. Yeah. Good. Normal. That's expected. Contractors hired to manage the O&G assets in the latter part of 2021. Those O&G assets must be worth a ton because they're spending money on them. Okay? Good. Spend money on the O&G assets. Develop them and make us more money. Okay. 1.1 million increase in depreciation and amortization expenses, mainly due to acquired intangible assets in Q4 of 2021 as part of the Nanotech acquisition. Okay, basically, what that says to me is that, look, we got depreciation going on, amortization. You got some stuff that you're depreciating for accounting purposes. You're not spending 1.1 million. You're just basically saying something that you bought is now worth $1.1 million less because it's a little bit older now. Yeah, doesn't mean it's not just as valuable, if not more valuable than before. People depreciate stuff. That's an accounting trick. It's not real. I don't think it's real. Okay. 1.1 million. Okay. The increase in R&D. Now we'll talk about R&D. Okay. Because that's gone up by about 4 million. The increase in R&D in the past 3 months compared to the 2021 is primarily due to $1.1 million for an increase in salaries and benefits, primarily due to the expansion headcount through Nanotech acquisition. Okay. You bought Nanotech, and now you got to pay the salaries for all the people you bought. That's a good thing. Okay, you got to pay salaries. Okay, next. Liquidity and capital resources. Okay, this is the statement that I think is the most relevant. Okay, we believe that our existing cash will be sufficient to meet our working capital and capital expenditure needs as production capacity begins to come online. Basically, they got $30 million in cash. They're not really spending a lot of cash, and they have more than enough cash as the revenue increases. They have more than enough cash as they're bringing production capacity online. What does that mean? That means production capacity. That means that they're making stuff. And when they make stuff, that's what producing means. They sell stuff. When they sell stuff, they get money. When they get money, that's revenue. Okay? They get more than enough working capital to make the stuff that brings in the money that will make them money. That's a pretty good thing. And they don't need to ask for any more money because they have enough. Great. Awesome. Great financial shape. Nothing more to say here. Okay? Leads me to Oilco. So by the way, great financial shape for a company that is just starting out. Okay, this is not a cash cow. This is not some sort of company that's been here for 100 years. This is a company that's developing a brand new technology that will revolutionize the world, okay? So this is great when you're investing in a startup venture, which is basically what Metamaterials is. Okay, next, we talk about Oilco and MMTLP, because that's in the Form 10Q as well, okay? We go to page 8, assets held for sale. As of March 31st, 2022 and December 31, 2021, assets held for sale represent the acquired oil and natural gas properties from the Torchlight RTO. That's reverse takeover. Now, the big deal about that, the only one thing that we care about in the reverse takeover of Torchlight is the Ora Grande project. They got this other thing called the Hazel project. Well, I don't give a flying F about that, to be honest. Okay, I really don't. Okay. It's very minor. Ora Grande is the big spiel. That's the thing that's got the 3.2 billion barrels of oil and God knows how much natural gas. Check out Rollerpigeons she's done a video on what the valuation of that natural gas is. It's phenomenal. Anyway, let's talk about Oro Grande. This is the main thing that matters. Okay. Our outstanding drilling obligation includes 5 wells in 2022 and 2023. Basically, they got to make 5 wells. They got to drill 5 wells in 2022 and 5 wells in 2023 in order to maintain their lease. Okay? All drilling obligations through December 31st, 2021 have been met. The drilling obligations are minimum yearly requirements and may be exceeded if acceleration is desired. Okay? Basically, in order to meet their lease requirements, they need to drill 5 wells a year. Okay. That's not very much. They can drill more. And they can drill more if they want to go to production, if they want to make those oil lands switch from being probable and impossible to being proved. They got to do some production. They can drill more. They're probably going to drill more. Who knows? Okay. Anyway, during the 3 months of March 31, 2022, we incurred an additional $1.1 million in costs to ensure that compliance with relevant leases was maintained. They're spending money. They're spending $1.1 million in Q1 to maintain that oil and gas assets. Those oil and gas assets are worth something. They're spending money to maintain something that they're going to sell for a boatload of money. That's my take on it. Okay. And then they go over how much ownership they have, because they want you to be aware of this. It's a big deal. They only own 49.88 revenue interest. Okay. They only own about 50% of revenue interest in the Oro Grande project, and it's owned by this thing called Hudspeth Oil Corporation, which is a subsidiary of Meta Materials. Okay, they have a working interest of 66.5%. The difference between revenue interest and working interest is the money that comes in, they'll get half. Working interest is the money they got to spend, like for instance, drilling and all this other stuff, right? They got to spend a fair amount of money to do drilling and whatnot and make sure that those oil and gas assets are not only maintained but increase and appreciate in value. That's what you want, because you want to sell something that's very valuable. So let's see. Oil and gas operations. As part of the arrangement with Torchlight Energy, we acquired a group of oil and gas assets and had interest in them as follows. The Oro Grande project in Hudspeth County, Hazel project in Sterling, we don't care about that, that's very minor. Hunted Wells in partnership with Kodiak in Central Oklahoma, again, that's very minor, we don't really care about that, okay? We've classified these assets as assets held for sale pursuant to our commitment to sell or spin out the O&G assets prior to the earlier of December 31st, 2021. Well, they didn't do that. The date, which is 6 months from the closing of the arrangement, or 3, such latter date may be agreed between us and the individual appointed to serve as representative of the Series A preferred stock. The Series A preferred stock will be automatically canceled once the entitled dividends have been paid. For more information on these assets and the description, see Note 5. Okay. Basically, these are assets that are going to be sold, and the Series A preferred shareholders, which are the MMTLP shareholders, are going to make money based upon that. Okay? How much are these assets worth? That's what page 15 in the fair value measurement talks about. So, how much are they worth? Well, we use a fair value hierarchy based on the relative objectivity of inputs used to measure fair value. Level 1 representing inputs with the highest level of objectivity, and level 3 representing the lowest level of objectivity. Okay? Here in this case, you can read objectivity to mean certainty. Okay? The fair value of assets held for sale is classified at level 3, as the fair value of the O&G assets was estimated by obtaining a valuation study performed by Roth Capital and a subsequent engineering reserve report by PTEC. Okay. Level 3 is the lowest level of objectivity. Okay. Basically, it's the lowest level of certainty. It's because those oil and gas, because you've got raw land and you haven't pumped the oil out of the ground already yet. Okay. The fair value of the preferred stock liability, that's the amount that they would have to pay out, is also classified as level 3, since the fair value measurement of the oil and gas natural properties forms the basis of the fair value measurement of the preferred stock liability. Basically, what they got to pay out is what those oil and gas lands are worth. They don't know what they're worth because they haven't pumped the oil out of them yet. They don't know how much oil is there because they haven't pumped it all out. When they've pumped it all out, they'll know how much there is. Do they have a revenue stream yet? No, because it's raw land. But they've done some test wells, they've done some test drilling and stuff like that, so they have an idea. Okay. The fair values of the funding obligation, operating lease liabilities, and the long-term debt would be classified as level 3 in the fair value hierarchy, as each instrument is estimated based on unobservable inputs, including discounted cash flows using the market rate, which is subject to similar risk and maturities with comparable financial instruments at the reporting rate. What does that mean, and has that sentence put you to sleep? It would put most people to sleep. Let's break it down. Estimated based on unobservable inputs using discounted cash flows using the market rate. Okay. What are these unobservable inputs? Well, the inputs are the things you need to figure out what they're worth, right? They're unobservable because it's based on the future price of oil. Do you know what the price of oil is going to be in the future? I don't think anyone does. I think it's going to be higher. The inflation rate, future cost, why do we care about the inflation rate? It cares because that's what the future value of money is going to be, right? That's what inflation rate means. It also means how much will it cost to pump the oil out of the ground. Right now, we're guessing, I don't know, maybe $35 a barrel to pump oil out of the ground. Might be more in the future, right? How much oil are you going to pump out of the ground? No one knows. Not per se. You have an idea. It depends upon the rate at which the oil is being pumped out also, right? I mean, are you going to put one well there and take 1,000,000 years to pump out all the oil? Are you going to put 1,000 wells there? I don't know. How many wells are you going to put there? I don't know. You don't know what the rate at which you're going to pump oil out because you don't have any wells there yet pumping oil. So that's unobservable inputs, okay? That's unobservable because you don't know. Discounted cash flows. What does that mean? This is what's called a net present value calculation, right? You're trying to estimate the current value of an income stream that lasts into the future. So an income stream means you're making money and that you're going to be making money in the future, right? Think of an income stream like, you buy some property and you rent it out to someone. That's an income stream. Well, do you know if that person is going to be renting from your property in the future? Maybe they're going to move away. Who knows? So you don't know. So what you do is you calculate what the value of that income stream is based upon a discount rate, right? It's like an interest rate. And in the oil and gas markets, everyone uses a discount rate of about 10%. It's kind of a standard thing to do, right? And they use market prices. Well, the market prices, who knows what they are? Because they change with time. So you're using a discount rate with market prices, and you're calculating the future value of an income stream when you don't have the oil and gas. Well, you don't have the wells pumping the oil out yet. You don't know what the price of oil is going to be. It's an unknown. So you don't know what it's worth. But I got news for you. 3.2 billion barrels of oil. That's worth something there. That's worth something there. Okay. Anyway. So that was my take on the overall take on the earnings report. What are my conclusions about it? Summary. In terms of metamaterials, they're really making good progress. They're doing good. They're doing what I would expect a startup, a startup firm to be doing. Their burn rate, which is the rate at which they're spending cash, is very manageable. They got lots of cash in the bank. Fiscally, they're in good financial shape. They got no major financial risks as well. I don't see huge risks there. And they got a lot of potential upsides because they're hitting the 5G market. They're hitting the medical market. They got a lot of huge markets they're hitting. And if any one of those things takes off, augmented reality, 5G, it's huge. Laser eye protection. I mean, it's just one after the other. They got autonomous vehicle market even. They got sensors. It's huge. It's just gigantic. Upside potential is great. That's what you expect in a startup company, okay? MMTLP, it's the other half of it. Okay, they don't got to do much now. They completed their audit. Okay, the next step is to spin out Oilco, and then they'll exchange the shares for the Oilco, right? Spin out the company Oilco and exchange the shares. They seem to be making good progress on that. Okay, look at the price of oil. It's basically $100 a barrel and above. If war breaks out even more, if there's all possibilities for oil going up in price a lot. There's a lot of possibilities. There's not a lot of scenarios where oil is going to come down in price significantly. Not a lot. So I'm seeing excellent potential for the price of oil going up, and that means excellent potential for the value of that dividend going up. Okay? Good job. Now, that was the earnings report. So let's do a quick shout out. Now, Rollerpigeons recently made a new video. It's really cool. She's estimated what the natural gas valuation is for the MMTLP dividend. Right? We never looked at what the natural gas was. I just looked at it as, hey, look, it's an extra. It's a bonus. I'm just looking at oil. If you make additional money in natural gas, even better. Rollerpigeons, she quantified that. She check out her video. It's really good. It's really good. Links will be provided. Another thing to check out, there's a chat that took place. It should be available from Cyntax, Queen of the Metaverse. Hopefully, you can play it back. You got Rollerpigeons, you got Uncle Smokey, you got Metasport Channel there. I'm there as well too. We're talking about what we think about the dividend, what we think about metamaterials, the Q1 report. It's pretty cool. Tomorrow we have the Sequire management and discussion and analysis, and that should be very cool too. Check that out. So with that, I'm gonna roll some stuff in. So I see that some people made some comments on my last video. This is my video reply. Here's my last video. It's links will be provided, of course. Basically, one of the comments is I need to do a correction. I said that Metamaterials was on the New York Stock Exchange. It's not. It's on NASDAQ and Frankfurt. So it's on the Frankfurt Stock Exchange and on NASDAQ. Okay. The other thing is to keep in mind is MMTLP is traded on the over-the-counter exchange. So it's traded over the counter, basically. And over-the-counter means it's the Wild West. They have no... They have a lot fewer rules there, let's just say. Okay. Check out Rollerpigeons' previous to last video. I think she talked about MMTLP and trading on the over-the-counter exchange. She likes that. She thinks that we could boost up even higher in price because of that. It's really cool. So basically, the reason I mentioned New York Stock Exchange is NASDAQ trades during New York trading hours. That's the thing to note, okay? So Metamaterials MMAT trades during New York hours and Germany Frankfurt hours, okay? So that's the trading times for Metamaterials. MMTLP, while it's traded on the OTC exchange, it's actually hard to buy. It may be difficult, if not impossible, depending upon your broker, right? Fidelity has been having some issues trying to... Fidelity has been having some issues with MMTLP, let's just say. And finally, we got this comment. John Huber said, good stuff. Hey, in any of your charts, are you using a 12-month rolling average to calculate oil? Seems there's some chatter. Okay, I said, no, I'm not doing anything with rolling averages. I kind of figured you can just use TradingView, and they take care of the price of oil. In fact, I don't do anything about what the price of oil is to calculate the dividend, right? I made a spreadsheet, and I did a spreadsheet, and I made a chart from that. And that chart, if you look at the independent axis, the x-axis is the price of oil. You put in what you think is the price of oil. You get out what you think could be, the actual dividend. Okay, there's two charts. One's based upon 20% corporate tax rate. The other is based on a non-taxable event, i.e. stock swap. Okay, this is what it's probably going to be like. So I just did that. I didn't estimate anything based on the value of oil. But if you want, you can try to see what the value of oil is going to be to put into these numbers, right? You can put a rolling average in. This is the price of oil right now, $99 per barrel. But it wasn't this way just a few weeks ago or even a few days ago. Okay, so a lot of people like to take what's called a rolling average or a moving average, right? You take a rolling average, take an average of the price of oil. Now, if we look at the rolling, if we look at the average that's going back 1 year, right? Yeah, that's about 260 working days. So it's a moving average of 260. Where am I coming up with 260? It's 52 weeks in a year and 5 days a week. 5 times 52 equals 260. So that's the so that's that. So that's your moving average of 260. Now we got the next thing is moving. You can even put in other averages if you want. Here's a moving average of 50. So we got a moving average of 50, moving average of 260. You can see where the price of oil is going. It's headed upwards, right? Right now, the moving average of 260 is $80, about $81. On the 50-day moving average, it's about $100 or so. Okay. Sometimes averages cross, like here in this case, for instance, it crossed to the upside. And a lot of people say, hey, the fast moving average, the 50-day moving average crossed the 260-day moving average. That's a big deal. Maybe the price is going up. And if you look, the price of oil's gone up a lot since then. That brings us to the concept of MACD, moving average convergence divergence. People made a lot of these technical indicators. What is it? What's a MACD? It takes two moving averages. Okay. Fidelity's got a good explanation of MACD. The moving average convergence divergence indicator is a momentum oscillator, primarily used to trade trends. It's basically there to tell you a trend, right? You got a MACD and a signal line. And the way it works is if your MACD crosses above 0, it's considered bullish. If it crosses below 0, it's bearish, right? But you want to check what it is going across the signal line. So your signal line is your slow-moving average, and the other one's your fast-moving average. That's how the MACD works, right? If you want the details and the info on MACD and moving average, so Fidelity gives you a quick overview. If you want a more detailed description, you can go to stock charts. Links will be provided. It talks about the MACD and the histogram and how that works. Okay. Here's all the info that you can get on MACD in terms of in terms of the chart info, stock charts, right? So there's a lot of stuff. I'm not going to go into that in detail. Read on your own if you're interested. But you can see, a lot of people pay a lot of attention to MACD. That also means that, for instance, you can do MACD on, so I mentioned TradingView, right? So this is what you enter for the price of oil, and then you can put in the parameters for the MACD. You can put the fast length, you can put the slow length, and you can see what the MACD is. There you go. I actually prefer to look at something called Bollinger Bands, because I have come from the crypto space a little bit. Bollinger Bands are pretty cool. They're based upon a moving average, and they just say you take a moving average and you go standard deviation up and standard deviation down, or 2 standard deviations up and 2 standard deviations down, right? You choose. Here is what a Bollinger Band looks like for Bitcoin. And it looks pretty interesting, okay? If you look, when the Bollinger Band comes together, when it's squeezing or necking, that indicates something. That's one of the features of a Bollinger Band. It means that you have low volatility. Okay, so the squeezing or necking of a Bollinger Band happened because of this point in time, this low volatility point in time. And low volatility basically means that you don't have any more sellers because all your weak hands are out. In addition, you don't have that many people waiting in the wings to buy. Okay, you don't have that many people waiting for a better price to buy. So you're at a point of low volatility, and that means that you can have a massive increase in price. And when the price increases and you ride the upper band, you have something called FOMO. That's an identification of FOMO, fear of missing out. That's when FOMO kicks in, and then you have massive increases in price, okay? Massive upside. Let's look at this again. This happened once over here in Bitcoin. And note also that the lower band drops away during this period of FOMO. Okay, it's dropping towards zero. Here you see that squeezing took place again. And what happened? The squeezing took place because of a period of low volatility. Then you started riding the upper band. Okay, the lower band drops away. Basically means you're there for massive upside. So let's look at what happens to metamaterials. MMTLP, the metamaterials torchlight preferred shares. What does that look like? Well, we've been riding the lower band we've been riding the lower band. What does that mean? That means riding the lower band, you got panic kicking in. You got large downsides, okay? And the lower B band does not fall away. Well, it means you got a downside, but the lower B band isn't falling away. What does that mean? That means that basically you got the stock going down. Or in this case, it's been going sideways actually for a while. You don't see it doing too much. You haven't got massive upside, but you also haven't got massive downside because the lower B band did not fall away. Okay, you were riding the lower B band, but the lower B band never fell away. Something to note. So let's look at metamaterial stock symbol MMAT. MMAT rode the lower B band. Again, the lower B band does not fall away. We have a fair amount of downside over here. Riding the lower B band, panic kicks in. You got downside, and the lower B band doesn't fall away. What does this mean? It means there's something called painting the chart. Okay. If you wanted to manipulate the stock price, you know how to sell short, and you know how to cause the price to go down. You can cause the price to go down enough that it hits the lower B band, and then you don't need to make the price go down anymore, right? Then you can just wait, and if it doesn't hit the lower B band again the following day, you sell some more. Right? It's called painting the chart. Now, stock manipulators know all about this. They may decide to manipulate the chart. They know all about these technical indicators I've talked to you about. Okay, that's why I don't place too much emphasis on technical indicators. It works really well with Bitcoin, but with metamaterials and actively manipulated shorts and all that, I don't know. Anyway, that's something to keep in mind. Painting the chart. So with that, all I got to say is that's the end of my video. Q1 earnings report looked good. This was my take on it. I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. With that, goodbye.